Listen, good to see you. I know you kind of thought that we might be in for some cautionary signals from the consumer heading into this year, and maybe risk appetites had to come in a little bit. How do things look to you now?
Hey, Mike. Hey, Sarah. Yeah, look, I mean, it sounds crazy when I go back and read our year ahead outlook from early January, where we wrote stuff like it doesn't seem like tariffs are in the price. And so I really want to get bullish because I feel like, the guys who were bullish at the beginning of the year have now all thrown in the towel and gotten cautious, and you romanticize you want to be a contrarian. But I just can't get there. You just talked about it a few minutes ago. I really think that this isn't a growth scare, that things are actually slowing a little bit, and I don't know yet how much they're slowing. So I need to see that first week of April. You mentioned this a few minutes ago, that maybe there's going to be some negative pre-releases. And then secondly, I'm not seeing that price action that makes you more comfortable, where a company that misses doesn't really go down. I mean, if you look at the results coming in even today, weak revenue numbers, it's not like people are saying, well, that's in the price and I'll kind of buy buy the bad news. So I think we're going to have some weaker guidance for Q2 when companies report in April. And I just think it's too early to take a ton of risk into that.
And is anything surfacing at this point, Adam, in this period where it has been unsettled and you have had, I do think, some valuation adjustment?
No, for sure. I just think the E part, the earnings part's a little harder to know. Look, I think the bull case will be you get a tax bill, you get a regulation focus, deregulation focus later in the year. Some of the things that made people, I would say, pretty euphoric on election night will get back in the spotlight at some point. But I think if you're the CEO of a big company, Leisman alluded to talking to executives, like they have to have their hand, they're sitting on their hands a little bit, figuring out how do I deploy capital, how do I move around my resources, et cetera. And so you could get a soft patch on investment from the companies as well. So I think it's a combination of the consumer slowing a little bit and sort of uncertainty affecting the management teams. And I think it's probably not transitory, meaning if I use that example of it's 1 month, it's transitory, it's more, it's not, it's going to be more than a month of a slowdown for sure. I worry a little bit that the consensus now, everyone just says, well, it'll rally in the second half of the year. For that to happen, we have to get away from this tariff stuff, focused on lower taxes, on regulation, on a growth dream for 26 and 27. We need some proof cases from AI where management teams get on the call and say, you know what, we're getting better at predicting our customer and our employee behavior. Because if I've learned anything in studying equities in the last 25 years, you don't want to short stocks where the margins are going up. And so you need that dream alive, and that dream is dead when people are worried about, tariffs and higher prices.
So what do you like instead? I mean, I'm looking at gold. It's up 15% this year. It's been on a pretty good run, above 3,000.
Well, I mostly focus on U.S. equity, Sarah, so I'll keep it in there. Although I did buy some gold in my personal life in the financial crisis. But I think it's healthcare. It's been, I would say I've been right for the wrong reasons this year. It's our biggest overweight because it's been defensive. But I actually think it could turn into an offensive sector because there's so many businesses that have lots of employees, low margins. It could improve. So you could see some AI proof cases from the distributors or from the diagnostics or tools companies over the next 6 or 9 months. So I like the healthcare sector a lot. I think they have pricing power, and I don't think it's going to be that easy for the government to reorganize how that system works. So I think the estimate achievability for the whole market got a little bit worse as the consumer slows, but it's getting a little bit better for healthcare. And so that relative call, I think, still works.
Right for the wrong reasons, still right, Adam. you got to take them where you can.
Rather be wrong, rather right than wrong, I guess, right?
Yeah.
I mean, that's what we're up to, yeah.
That's it. We'll see you again soon. Thanks a lot.
Yeah, good to see you both. Have a good weekend.